Hello, everyone. I think we're ready to start. So before we get into this, as usual, let's just put up the risk warning for a minute or two. So we do this every week on a Wednesday lunchtime. So we have a 12:30 quick look for maybe 20, 25 minutes at the major markets, what's been happening over the last few days, what to look out for in the days ahead, and levels and where the opportunities might be, that sort of stuff. There's a lot gone on in the last week. We've seen we'll start off by looking at a few US stocks because we had results from Facebook last week, and they were all right, but they were really cautious about the outlook for growth for the next quarter because of clearly all the security concerns that we know about and investments that they're making in security. So their share price was down 20% in out of hours trading. It's a big move for any share, 20%. I thought maybe it was an overreaction, but we have seen it drift a little bit lower since then. So we'll take a look. We'll take a look at Facebook shares. So the likes of Facebook, Netflix, and even Amazon have been drifting and putting a bit of pressure on US stocks in recent days, although we did see something of a bounce back yesterday. So I think the stock market is an interesting one. Later on tonight, we've got results from Tesla. And I think it's always quite controversial. I think last time round in the earnings call after their quarterly results, the boss of Tesla, Elon Musk, said he was bored with answering boring questions or stupid questions or something, which understandably didn't go down too well with lots of people. So it'll be interesting to see, first of all, what Tesla's numbers look like tonight. I think they're expected to show just over $2 a share in earnings. And also, is there any drama from the conference call? But ahead of that, tonight we got the US interest rate decision. No changes expected. Probably the big event this week for central banks anyway is tomorrow, Thursday. So Thursday lunchtime, 12 o'clock, Bank of England interest rate decision. And Bank of England is widely expected to raise rates tomorrow by 0.25%. So it's only the second rate rise since the financial crisis back in 2008. So the last time we had rates increased was in November last year. So we're expecting a rate rise tomorrow. Pound is clearly the one to watch. And then to cap it all off on Friday, we've got the non-farm payrolls. So it's the first week of a new month. Traditionally, that only means one thing, and it's US unemployment numbers. So they're at 1:30 on Friday, UK time. And I think about 190,000 jobs are expected to have been added in the US economy. So so far it's been a bit of a quiet week, but I think it all ramps up from tonight, starting with that US interest rate decision, but no changes expected there. Okay, let's get into it because that risk warning has been up for more than long enough. I thought we'd start for a change. Now, we tend to look at major markets during this session, but I think because we've seen so much drama for US tech stocks over the last week, I thought we'd start off by looking. So here's Facebook. Let's just zoom in quickly on Facebook. So it really was a dramatic move. So going into earnings, so whenever it was, 25th of July. So during actual trading, so official trading hours, the Facebook shares hit fresh all-time highs. So they traded up as high as $218 a share. Those earnings came out with the cautious outlook for growth because of security. There is an after-hours market that trades. So after 9 o'clock UK time in the evening, when results come out, we do see them trade. But most people probably had to wait till the next day. And there you can see the move the next day. So they officially closed at 218. And they opened the next day about 175. So that is the 20% move down. So did try to recover during the day, didn't hang on to it, and on Monday of this week, slipped a little bit lower. Something of a quieter day yesterday for Facebook. You can see on the candles. So let's see. Let's take a look and see. But I think it's going to be an interesting few days because again, even though we've seen this massive plunge, and it is a big move, 20% is a massive move. It was something like $150 billion wiped off the value of Facebook. We are only back to where the price was just over 3 months ago. Yeah, so it's knocked it down to a 3-month low, and it doesn't actually change this bigger picture trend. If we were looking at the big trend in Facebook shares going from January 2016, when they were about $90 a share. This trend line's done a good job, and all the crash over the last week has done is brought it back to the to that longer term trend line. So I think it's really interesting down here. So for the levels I'd be watching, 150 to 160, 150 the old lows from March of this year was big support. 160 the trend line's coming in. Let's see what happens. Can Facebook turn it around in the next week or so? Let's see. I think interesting one to watch. There's a few questions coming in on YouTube, so I'll jump to those a bit later. But if you've got any questions, just use that chat thing on YouTube, and I'll answer them if I can. So there's Facebook. A quick look at Netflix. If I could actually type the code correctly, there we go. Netflix. So again, that's off a little bit. It's off about $80 off the high. So again, it's not far off 20% off the highs for Netflix, but again, it's only really knocked it back to where it was in May. So these tech stocks had been doing incredibly well, had driven the market, the wider markets a lot higher. So plenty of people thought they were overcooked anyway, and maybe this move is overdue. Let's see what happens. And then last night, of course, we had Apple. So Apple, I think, beat expectations. We didn't have any surprises from Apple, so nothing particularly negative from Apple. I think the share price moved about 2.5% higher in after-hour trade. So let's see how it performs today. And then finally on the stocks, Tesla this evening. It's been a funny year for Tesla. Had seen clearly a lot of growth, the manufacture of electric vehicles, but this year's been pretty flat. We've seen it trade as high as 380, 390. I think apparently it's got the most short interest out of US stocks, or at least major US stocks. So plenty of people betting against Tesla, but it's pretty flat on the year. So let's see what the earnings look like tonight and whether we get a surprise from those this evening. So US stocks very much in focus as the earnings season continues to sort of rumble on. Right, we'll come back to the broader US stock indices in a few minutes, but let's start off by looking at some of the FX markets. So I do this weekly video on our YouTube channel. So if you're not subscribed to our YouTube channel, subscribe to it, because we do videos on traditional currencies, indices, gold, oil, cryptos, all that sort of stuff. And it's been pretty dull for pound US dollar. It's been a pretty dull few weeks. We're still basically trapped in this 3-month slide that we've been in, and we go back to the highs up here from April, and it's been falling against the dollar for about 3.5 months now. But it just can't make that much headway through 133. I think it's clearly the market to watch. I mean, there's the interest rate from the States tonight, no change expected there. But tomorrow's interest rate rise, everyone it's widely expected the Bank of England to raise rates. It'd be very disappointing if they didn't. Is that going to be enough to start lifting the pound, and try and crack this downtrend? It's been a pretty dull couple of weeks. It's well supported by 129.50, 130, big old levels down here. But as I say, it can't make much headway through 133. So I wouldn't expect too much in the way of drama, today. You think we're going to have just a waiting game now until tomorrow's announcement. But those are the levels to watch. I think 133 on the upside. Can it make a decent move through there, shake off this weakness, and start to build some sort of recovery? I think on the RSI down here, we do have this bullish divergence thing going on that I've talked about in the past, where the market sells off, RSI goes oversold, market rallies, sells off again, but the RSI makes a higher low. So this can be a suggestion that maybe the weakness is running out of steam, but so far we're not seeing it. It's just pretty dull. But maybe it'll stop being dull this time tomorrow when we have that interest rate decision. So euro dollar has, I think this is even taking dullness to a whole new level. The euro against the US dollar, it just is trapped. Hang on a second, let me flip this back. Don't know why my scales disappeared there. It's just trapped in this range between 118.50 and 115. 115.20, and you see it's been stuck here now for 3 months. Will we get a surprise tonight from the US on interest rates? Don't think so. So I don't know. Just because someone's asked, what do you think is it going to break? My money, if I was a betting man, my money would be on a break to the upside. But basically, just because this weakness seems to be over, this weakness we had looks to be over. And the old levels from back here, 115 was big support in October, November of last year, but it's just not happening. You can just see just how trapped it's been. It feels very strange to have this market do this for so long. I can't remember when actually, I suppose you could go back up here when it made a top and then sold off. But we need a break either way. So we need a break through 118.50 or a break below 115 to give us the signal as to the next move. And at the moment, we're just not getting it. So they're pretty boring. Pound, US dollar, euro, dollar, pretty boring. But maybe tomorrow, at least for the pound, things will start to change when we get this interest rate decision. Let's have a quick look at Bitcoin, just quickly. Because that's boring as well. I think it's interesting. We looked at this over the last couple of weeks. We had seen a bit of a lift for Bitcoin on rumors of an ETF coming in. Maybe different ways of gaining exposure. I think there was talk that, who was it? I've completely forgotten. BlackRock were looking into the feasibility of offering some sort of Bitcoin investment products. That definitely helped lift the price, and it lifted it off an area that we've been talking about for ages. 5,500 to 6,000 has been the floor for Bitcoin since November last year. So if it was going to recover from anywhere, this was definitely the zone. Now, we have had some negative news in the last, I think last Friday, the news broke. It was the Winklevoss twins, the two guys, I think, who founded Facebook with Mr. Zuckerberg, and I think sued him in the end, didn't they, to get some money out of him. And they were proposing a Bitcoin ETF, and on Friday that got turned down by the SEC. So the US regulator turned it down. So I think we've seen a bit of cooling off for the Bitcoin price. But in the great scheme of things, 5,500 to 6,000 is still the floor. We do have this recovery going on. What will be interesting will be to see how far this weakness goes. Yeah. So personally, I think if we do drift back to the mid 6,000s, it looks interesting from maybe are we going to see it bounce again sort of thing here. But because we have had these days so little news about Bitcoin and cryptos in generally, the volatility has just evaporated from this market. We get a little bit of room, a little bit of news. The price has a run for a couple of days, and then it just goes down again. I should say something about the new ESMA regulations that have come in today, isn't it? Is it from today or whenever it was, from this week? So it's basically, if you're not familiar with it, if you trade spread betting and CFDs, there are new recommendations, regulations on margin. So your margin rates have quite probably increased. So in the old days, if you were getting, let's say 20 to 1 leverage on stocks, that's changed to 5 to 1 now. So there are certain maximum levels that can be offered. So you may well have seen those changes. And also the risk warning aspect has changed. I don't know if you've seen any of our tweets or emails this week. Every company who pushes out a message has to state what percentage of clients lose money. So this is a really big change that we've seen that is aimed around really protecting investors more and making them more aware of leverage products. But the big headline change, I think, for most clients or any of us who trade spread bets or CFDs or FX, whatever it is, normally we're having to put up more money to open up positions compared to what we were having to put up before the end of July. So those ESMA regulations, big news for the industry in the last week or so. Right, S&P, the broader US stock market. Like I say, we've seen a bit of a wobble over the last week as the tech sector in the US has come under pressure, but it hasn't changed this big picture. If we pick up on some of the old levels for the S&P 500. So there we go. So we had these old highs from back here in March, around about 2,800. We saw a decisive breakthrough here. It's the sort of third week of July. Okay, we've had a little bit of a drift off, as you can see, the last few days. But breaks like this are normally positive. The recovery off the lows is still going. I'd have to say, what's the next target going to be? Well, assuming this recovery is going to continue, the next target would probably be a run back up to those all-time highs just before markets fell off a cliff. The highs around about 2880 from the end of January. So even though the market's drifted off, let me just change this to an hourly chart. I'm a big fan at looking at previous support and resistance levels. If we look on the S&P, so on the way up, loads of little levels left. 2710 rallies, sells off. 2730 rallies, sells off. 2770, and then it banged around from mid-July around 2790 the 17th of July, for quite a few days here where it's 2790. And then this sell-off so far has stopped at 2800. So the immediate short-term support for the broader index, 2790 to 2800. So even though it slid over the last couple of days, in the grand scheme of things, this is a market that does still feel to be in recovery modes. So I wouldn't, famous last words just yet, bet on it falling off a cliff. I think if we start to lose these old 2790 levels, the market's currently ahead of the official opening is trading at 2817. If we start to lose 2790, okay, then yeah, we have to worry about a deeper sell-off, maybe back to the late June lows at 2700. But for now, even though, look at the sell-off the last couple of days, it's nothing really. If you look at in the context of what the market has done over the last month, no market moves in a straight line. It's just a normal bit of a wobble, and there continues to be, or has been at least, the appetite in the last few months to be a buyer on dips. So a quick look at the US 30, the Dow Jones. There we go. Similar sort of thing on the Dow, although the big level to watch on the Dow, these old highs from the 27th of Feb, just above 25,800. So we haven't cracked that quite yet on the Dow Jones. So let's see what happens and see if we can manage to break through some of these old resistance barriers. But for now, at least, US stocks still seem to be pretty strong. So a quick look. We don't normally look at the Nasdaq, but because tech stocks have been so much in focus, let's take a look. Here we go. So there's our, how far back can we go here? Okay, let's zoom in. We're going back to the lows, June 2016 to now. So since June 2016, the Nasdaq's gone from 4.2 to 7.4. So I'm trying to do the maths quickly in my head. It's about an 80% rise, isn't it? In a couple of years, 70 to 80% rise. You can see the weakness over the last few days. Clearly, if Facebook and Netflix and Amazon are getting hit, that is going to weigh on the Nasdaq, because those are the sort of stocks that make up this index. But in the great scheme of things, it's nothing. It's just a wobble. It doesn't change that bigger trend. The market would have to fall about 1,000 points nearly from where we are now. So 15% drop in the Nasdaq to change that bigger trend that's been in place for the last couple of years. So it's been some good headline grabbing news over the last week, with Facebook dropping 20%, but it doesn't really change that bigger picture. Okay, let's take a look at the last two. We'll look at gold and oil. Let's look at oil first. I think these are two interesting markets. I mean, oil's interesting, I think, as I say every week, because it's moved so far. In the last year or the last 13 months, the price of oil is up about 70%. And it doesn't feel as if it's had that much of effect just yet on sort of wider economies, that the price of oil, up near $70 a barrel. But it's interesting here because we had that, we've seen sell-offs along the way, and some pretty steep sell-offs since May in the price of oil. You look at here, it goes from 73 back to 63, so nearly a 15% drop, turns around, pushes out to just about fresh highs for that recovery. Sold off again, middle of July. Again, it had a half decent bounce, and it spent the last couple of days coming off again. So oil is interesting because for now, that trend is still intact. What does the RSI look like? Not quite oversold. We haven't gone oversold on oil for quite some time, actually, not at all in the last sort of 10 months or so. But if it was going to bounce from anywhere, again, we'd be picking up on these old major lows. So we saw a big turnaround 18th of June ahead of $63 a barrel. A bit of a turnaround, coincidentally, 18th of July at a 66. So 63 to 66, big level of support for oil. It's currently trading now at $67.30. So I think that's an interesting one to watch. This afternoon, we've got US oil inventories. So they come out every Wednesday afternoon. How much oil does the US have stockpiled? So we can often see volatility on in the price of oil on a Wednesday afternoon. But for me, as long as 63 to 66 stays intact, that trend is still up. If we start to lose 63, then it does start to get, maybe a bit more interesting if you think the price of oil has gone too far, and we can start looking at a much deeper sell-off. But for now, the old low is back here, and that trend line support coming in here. What's this? Somebody writing some spam on our Facebook page. Okay. Okay, so there's the oil price, and finally gold. It's been a bit of a quiet week for the price of gold, but again, I think it's interesting down here because we are, for a couple of reasons, we're back to what had been in the past an important level. If we go back to March 2017, July 2017, it's quite choppy trading for the price of gold, but the whole sort of 1190 to 1200 area was seen as value. We saw buyers come back in. So we've seen the market turn around, and this is the question now. We've seen this decline in the price of gold from 1365 in April to as low as 12, almost 1210 by the middle of July. And it's all about, are we going to see the price start to build a base down here? So far, it's promising. We can see, looking on the daily candlesticks, if I zoom in, we've seen quite a few goes at trying to push lower, and it gets bought back during the day. So we're definitely, at the moment at least, seeing an appetite for being a buyer ahead of 1200 for the price of gold. The RSI, we've got this bullish divergence thing going on where the market's pushed to a low, pushed lower still, but our RSI is making high lows. So again, suggestion that maybe the weakness was running out of steam. But I don't think there's any urgency to go piling in, because that trend off those highs is definitely still down. So at the moment, it take a move through about 1260, 1275 to change this bigger trend. So it's been something of another, maybe an inconclusive few days or couple of weeks. But I think 1200 is an interesting one for the price of gold to see if we do actually see buyers come back in down here at these levels, and the price stage something of a turnaround. So quiet market, but interesting nonetheless. So we'll start wrapping things up there. Stuff to watch, immediate stuff to watch: US stock markets, or stock markets in general, because they've been battered, relatively speaking, over the last week because of the tech weakness. But are we going to see them come back again? Probably the most interesting market for the rest of this week is pound US dollar, because we've got that Bank of England interest rate decision tomorrow. I think the market is forecasting an 80% chance that rates will go up by 0.25%. If everyone's expecting that, it's normally, clearly it shouldn't be a shock when it happens, because lots of people are expecting it. But let's see how it reacts, and can it shake off this weakness? And then to wrap off the week, we've got those non-farm payrolls at 1:30 on Friday. And that's something that can affect all sorts of markets, well, everything really. Stock markets, foreign exchange, and the price of oil, those US job numbers. So they come out on Friday. So we've had a bit of a dull couple of days this week, but I think things definitely have the potential to start getting a bit more interesting and a bit more volatile from this evening onwards, when we hear from the US about their latest interest rate decision. So that's it for this week. As usual, if you have any questions, feel free to drop me an email. My email address is david.jones@capital.com. To find out more about the company, open a demo account, open a real account, all that sort of stuff, you can go to www.capital.com, and you can follow me on Twitter for updates about the markets, and I'm at Jones the Markets. And just one last thing, we do this on Facebook and on YouTube. If you're watching it on Facebook, if you go to our YouTube channel, which is Capital.com, there's loads of videos there about trading psychology, markets, all that sort of stuff. So we try to upload 4 or 5 videos a week to the YouTube channel. So go there and subscribe to that and get all that. But that's it for this week. We'll wrap things up there. As I say, any questions, just let me know. Thanks for coming along, and we will do it all again the same time next Wednesday.